Is this it?
Yeah, I see people wishing his Discord all watching the 1 minute chart. That's
That's too intense, man. Oh, but yeah. People wishes Alec is great.
He's a wizard. He's so
I think
smart.
I'm not gonna lie, he might have been one of my favorite like my favorite interview we've done. I don't know why.
Oh
He just
yeah.
has a way with words. Like his like vocabulary is just like incredible. Like that guy, you could tell just by looking into his eyes that he works like every waking hour of his life, whether
Oh
it's on
yes.
trading or building systems or whatever. Um, did you see what he's trying to do in the U.S. investing competition? Did you see that?
I did see that.
Yes,
He's
I
like trying to
did.
like set up like a little team of traders to go do it and like go against Minervini because Minervini always posts his guys and stuff. And he wants
Yes.
them to all have DTR in their tag on the competition. Oh, it's so funny.
I hope he does it. He's good. He will actually. I know he's gonna do it. If not this year, sometime soon. I know that's gonna happen.
You see, Rocket Lab took a little hit in the after hours.
Yeah, I
Yeah.
think the one of the rockets exploded or something, right?
Yes.
Not again. Not a lunar situation.
Don't we're not bringing that up.
No, those are the dark days. All right, welcome everybody. Welcome in. We'll get started in a minute here.
Send more link out. All right. So yeah, we'll get a few people in here live, and then a lot of people watch the recording, which I'm excited. I know after this, I'll go back and watch the recording.
Cool.
Um,
Yeah, mic checks are good. Do we sound good, everyone?
you sound great. You both sound great.
Yeah, you both sound great as
Oh,
well.
you too. You too. Likewise.
Perfect.
Whenever you're ready, Mr. Bracco.
Yes, give me 1 second. I just want to make sure the recording sounds good. All right. Yeah, I guess we can get started here. Welcome, everybody. Good evening. We have a very special guest that I'm looking forward to today. I know his Trader Line interview that went live over the weekend with Richard Moglen is kind of making its way around. I know some people have watched it already. I haven't gotten through the full thing yet. He might have broke a record for the longest interview on that YouTube channel. I think it's like 3.5 hours long, which is just crazy, but it's awesome. It's super awesome. But yeah, we have Clement Ang on today. I'm super excited. I think a lot of you guys are going to be able to, find some inspiration from him. I think he trades really similar to a lot of you guys in the group, TSTR as well. And I'm excited to have him on. And, we're probably going to repeat a few questions you were already asked from Richard and stuff, for anyone who doesn't know you or hasn't seen that video, but we can keep it brief. We don't, have to go into too much detail on them. But, why don't you, start off just by telling us a little bit about how you got into the markets and trading in the first place?
Oh yeah. Thank you, Bracco. Thank you, Patrick. Like, it's an honor to kind of be on here today. So a little bit about myself. I first was in touch with the markets in late 2019. So I was a second year university student at that time. My mother gave me a sum of money and she kind of asked me to go and buy this bank stock that was listed in the Hong Kong Stock Exchange. Um, and like, so this was kind of the stock that she asked me to buy. It was HSBC Holdings. So, ooh, it went on a big run. But back in 2019, it was in a stage four downtrend, right? So she was kind of asking me to buy somewhere here. And then COVID hit. So like the stock basically got cratered, right? And I had to sell at a loss. Um, and then kind of as a university student at that time, I just deferred to the books. So went to the bookstore, kind of picked up a couple of books. So Market Wizards was a very prominent one. And then I kind of went back into the markets, right? So um, COVID QE bull market was you can throw a dart at anything and it will go up. And so it was a great, great time. And then kind of being humbled by the 2022 bear, just trying to go long against the tide, right? So, you have a downtrending market and, just trying to go long stocks, even the oil and gas ones, they eventually topped out. It was brutal. And it was like a year-long three-wave down bear market. And then kind of going into 2023 was when I hit that really big setback that I kind of described in my interview. So with Richard. So kind of going long Tesla, and just unaware that the market had bottomed, right? Like I had just learned short selling from Gil Morales, and just kind of knowing very little was very dangerous too. I kind of went short against a changing trend, and that was brutal. It was a really, really brutal trend. Sorry, it was a really brutal experience. And it was then at 2023 where I kind of, um, debated whether I should continue and whether trading was for me. But then obviously I did not give up. And I kind of took things a bit more seriously. So kind of like comparing and contrasting my before and after. So before I kind of read a few books, subscribed to a couple of newsletters. I felt like I kind of knew what I was doing. I had no rules, right? So I was just kind of, trading as I like trading what I feel, and then letting the emotions succumb, like, or being succumb to my own emotions, right? So when things don't go well, then I get emotional. I start going on tilt, revenge trading, over trading. So these kind of like behavioral leakages is what I like to coin it, was what killed me. And then when I began to take things more seriously and treated trading like a business, kind of going through all these books again, interviews, and just coming up with a set of rules that I have to abide by was when my trading really turned around. So just being more process oriented. Um, so that's one part, and then the other part is kind of, upon a little bit of introspection, being more in tune with my emotional state, right? Like, how does the market affect me emotionally, and knowing when to fade myself at times, right? So like if I feel like very, very emotionally aggravated, I've been stopped out 5 times in a row, I'm beginning to go into a drawdown, I feel quite pissed about it. Then I know instead of sizing up for the next trade or trying to make those gains back, I slow down, and I cut my size, right? So just doing the opposite of what my emotions are telling me, really helped as well. So, kind of trading being both technical and mental, you have to juggle both very well, to kind of be successful, is what I would say. And so then, that's kind of my journey in a nutshell, where after 2023, I decided to, test my luck and test my skills, right? I joined the USIC in 24. Overall, it was a good year, but I definitely made a couple of mistakes. And then kind of going into 25, determined to fix those mistakes. And that culminated into the year that was last year. So that's kind of my story in a nutshell. And it's been, I would say, I think it's almost 7 years now since I've been in the markets.
And
It's
you
just
feel like,
just beginning.
yeah, yeah.
Just
Was
beginning.
was 2024 the year it really felt like, everything started coming together?
I would say so. Like it was murky. So I distinctly remember starting 2024 with NVIDIA. So that was very memorable, right? Because you have this like picture perfect big weekly base VCP. So I started the year with this. Um, and then so this was one very memorable trade. And then the other thing was, I think it was Bitcoin. Like that 2024 run in Bitcoin was picture perfect, right? Like, so right here in February, kind of the first ETF came out, and then it began to form a low cheat, right? So it consolidated sideways on volume dry up, which is perfect, right? So if you look at the volume here, as it consolidated sideways, it was receding, and I remember buying this one too, and it was a great ride. Um, and then the other trade was that I caught was in silver. So this was a big one. I think it was going into April, like after the April correction, um,
Yeah.
which was somewhere here. So silver kind of made a big move to start the year, and then the market corrected. The semis were correcting. Silver came down with it, and then here it kind of formed this 3-day low cheat. And this was quite memorable because at this point in time, the silver miners were setting up as well. So if we look at something like a Pan American Silver back in 2024, see like move up and then sideways consolidation, I guess you can consider this a flag or a cheat,
Yep.
right? Um, and then there were other stocks, other silver miners as well. I think AG was one of them. So this was a big trade. Like I was in the AGQ as well as a lot of these silver miners. And by this point in time in May, I think my equity curve was up about, 70% year to date. And then from that point onwards, it all went downhill because I remember kind of riding that high. Like by mid-year, I was close to triple digits. And I was following a process, right? So like the gratification of like following your process, managing risk, and seeing the reward was very gratifying for someone who kind of been through the dumps and I've been trying to recover from that drawdown. That I kind of went into what I would call winner's tilt. So um, at that point in time, I saw the miners, they looked like they were setting up. But as you can see, let me pull up my drawing tool. Give me a sec. How do I move this? As you can see, like this was just like a whole lot of chop for a while. So like, I made a big move and then kind of retraced. And I was trying to go long crypto the entire time. I think Bitcoin began to chop. And so this was the chop, right? Like this was brutal. And I find myself trying to get positioned in crypto with hopes that it would make a move higher, but then I get cut. And at the time, I was risking like 0.5% of my equity or 1% of my equity. And very quickly after May, I began to draw down and began to draw down. And the market wasn't exactly easy at that time as well. So I kind of drew my 70% all the way very near back to flat. That was brutal.
Wow. Yeah.
And I took a couple of weeks off, and what I did was I went back to read Mark Minervini's book. So I kind of told a couple of folks like, think and trade like a champion. I I know almost every page in this book because I read it over like 10 times in 2024. And my favorite chapter was the last one where he kind of speaks about how to achieve super performance. And they're kind of like eight guiding principles, right? Four on offense and four on defense, right? And the most memorable ones is kind of trade your largest, when you're trading your best, and then trade your smallest when you're not trading your best. And then there's concentration, turnover, and then of course, managing your risk. So making sure you don't draw down as much. And then like it was just nice at that point after the yen carry trade crisis in August, where we went on a massive run. And I was just kind of following Minervini's principles and adhering to that, taking one good trade at a time. That I was able to finish the year up 80%. So 2024 was quite a roller coaster for me, but then it also marked some sort of turning point because it was also the year when I met Christian Flanders for dinner, and putting all that together, it kind of began to stick. So like while I ended 2024 happy with 80%, I was also not happy because I wasn't able to control my drawdowns, right? So kind of still booming and busting at that time. And I guess, I got lucky towards year end when we actually got that rally. Um, and then kind of going to 2025, I told myself like, okay, I got to right my wrongs. Like I have to learn how to control my monthly drawdowns better. I need to be able to cut size when the market environment is not conducive. Um, and then, yeah, so it worked out. Things really began to click, and 2025 was very special because we kind of got like a full cycle in the span of a year, right? Like you got your chop from January to February, and then your downtrend late February to April, and then your capitulation, and then your really bullish uptrend from April onwards into the end of the year. So like kind of trading through that entire cycle was when it really clicked for me, because like I was just taking everything I learned over the last 5, 6 years at that point, and I was just putting it into practice. And then of course, like along the way as you trade, you kind of have these couple of aha moments, and you just put that into practice, and then things are things just stick. And then that's kind of how 2025 was for me.
You
Go ahead, Caesar. Go ahead.
You had mentioned some rules and from that conversation or rules prior to that conversation with Christian. What I want to ask directly about are some of your drawdown rules, and if you have specific metrics and specific points to where you begin that sizing down process, or combining it with those principles from Mark Minervini. At what places do you begin to implement some of those guardrails to then prevent your drawdowns? And then, for 2026 and beyond, I kind of what are your goals regarding your drawdown percentage each time when it inevitably comes?
Yeah, that's a great question. So, going into 2025, one thing that I was very, very aware of was, what my last five trades have been like. So kind of basically what I do is like after I place a trade every day and then I kind of log it into an Excel sheet, and then at the same time I'm a subscriber of TraderSync, so it imports my trades directly from IBKR into there, and then so I take a look at that, and the moment I see myself like losing five times in a row or taking more losses than I would like, so for example I get loss loss win loss 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 something like that, is when I begin to size down. So in the beginning of 2025, like in the first quarter of the year, I was actually risking between 0.5% and 1% of my equity capital per trade. Um, and that was actually pretty stressful because like it introduced a lot more volatility to my equity curve than I would have liked. And then so kind of going into quarter two and beyond right now, I'm only risking between 0.3% to 0.5%. And so then I vary my risk per trade according to whether I've been trading well. So, whether I've been whether I've achieved trading traction. And then secondly was kind of my read on the market environment and whether it's kind of conducive to be a little bit more aggressively positioned, or should I be pulling back and being more conservative? And so then those two kind of factors generally is how I dictate um, my aggression, right? So
Mhm.
when I begin to see myself taking more losses than I would like, so five losses in a row, I would cut size in half. I'd also be a little bit more selective with my setups, right? So just kind of slowing down that drawdown process, and then at the same time, like imposing that floor of not more than a 5% down month, right? Because I want to be in a position where the moment I start trading, well, I can recover from that drawdown very quickly. Um, so kind of five trades, and then I cut size. And then if the next trade doesn't work, I continue to cut size. The weekends help a lot. So I take a step back and kind of
Yeah.
reevaluate what my stance of the market should be. So many times, like last year, where I began to draw down and coincidentally it was on a Friday. And so then I had the weekend to kind of stew on things and kind of look at the opportunity set again, kind of flipping through many charts and kind of asking myself a couple of questions. So the first question I asked is, do I see an abundance of long setups, or do I see an abundance of short setups, or do I see both, right? In my weekend kind of routine when I look through and comb through my watch list. So I'm going to go off a little bit of a tangent here, but kind of how I have my watch list set up is um, it's a little bit like Minervini style, where the first three is a predominantly like a long watch list. So any kind of stocks that I screen and they look interesting to me, the first of all, I'll dump it into this wide list, right? So any stocks that are in a stage two uptrend, so trading above the 50-day, 200-day, and then also above the 20-day, is where I would dump it. And then when I flip through that, I begin to kind of promote stocks that look almost ready. So it's probably like forming a consolidation, and but then perhaps it needs more time, right? Maybe a couple more days, and then it'd be perfect. So like BTSG, for example, this is something where if I look at this in my almost ready list, okay, this looks like something that is actually ready for the session. And what I do is I would promote it into my execution list, right? So kind of looking at this, it's kind of consolidated sideways, volume will dry up, and then I don't know what my trigger of the trade will probably through prior day high and then stop at the low of the day. So I do this exercise every day when I wake up. And then, of course, when the market begins to break down, you'd see a lot more stocks kind of break the 20 EMA. And then so I use that as a guideline and I promote stocks that kind of broken down. And I kind of judge the balance of setups, right? So this is my situational awareness, where if I see a mix of both, then, you know, it's probably a choppy market environment. Or if I see a lot of short setups and no long setups, then, then that probably tells me I want to be focused on the short side. So kind of blending my situational awareness with how much I'm risking per trade. And then the moment I kind of see a winner or two and my bias is being validated by the market is when I'm comfortable kind of going for, say, I was risking 0.2% equity per trade. I'd ramp it back up to 0.5%. And then I'd see what that trade is telling me. So if it works, then okay, like the short side is in play. I begin to look for more setups, and then when that works, your equity curve starts to pick up, and then you can quickly recover from that drawdown. So kind of blending my own trading stats to dictate my aggression, and then my read on the market. So the situational awareness aspect. When you combine both together, that's kind of how I manage my drawdowns.
Awesome.
What up? Go
I
ahead,
got a quick question because you mentioned it a few times. I want to ask, what are your thoughts on shorting and does it play a role in kind of your system and your playbook?
Yes. So shorting holds a very special place for me because my biggest drawdown came from shorting. I would say that one thing that is quite useful, especially for market participants that have been in the market for a long period of time, is and if they do both long short, is to kind of calculate your profits, well, your aggregate profits long and your aggregate profits short. And so for me in 2025, it was about 7 to 3, right? So 70% of my gains came from the long side, 30% came from the short side. And then kind of continuing to trade along the way this year, I came to a realization that shorting is important, but it's also immensely difficult, right? So it's important in the sense that if you get a bear market, it's very useful. But when we're in a bull market and stocks are in uptrends, it's difficult to time. And it introduces a lot more, I guess, emotional aggravation than a trader would probably like. So, for example, I remember the market in October, it went on a crazy, crazy run. Um, and it was like at this point in time to start October, I didn't see too many setups that kind of
Yeah.
that was to my style, right? And in addition to that, I missed a couple of stocks that I should have taken but did not. So USAR was an example. Like I watched this broke out, I'm like, holy cow. And then it doubled in a week and I'm like, holy shit, I missed this. And this was like it gave me a lot of stock FOMO and tilt. And so then I was shifting my bias to the short side and I tried to short. So I did it successfully in the sense that um, I was timing my entries perfectly. So I was short going into October 10. But the mistake here was I did not cover enough, right? So then when the markets ripped, I gave it all back. And then I was also short going into the 22nd of October. It worked briefly, and then I didn't cover enough, and then I gave it all back. So that's the emotional aggravation that I'm talking about, where I've kind of reflected and realized that in a bull market, you don't want to be very, very aggressively short. It's, you just want to keep it simple. And so kind of in the grand scheme of things, if the market is in a long term, always in an uptrend, and of course you get these blips of bear markets along the way, I would say it's important to learn, but it's not really important in terms of practice, right? Like you don't necessarily have to short to make a lot of money in the markets.
Well said. Very well said. Yeah.
What what are some of your goals in 2026 besides maintaining drawdown and like executing good trades? What are like some maybe personal or professional goals for this year right now?
Oh yeah, yeah, that's for sure. So kind of looking back at my year, right? One of the biggest things that one of the biggest things that I want to work on is to probably blend a little bit more of the fundamentals into my stock selection. And by fundamentals, I don't mean just, looking at the balance sheets of a stock or anything, but more of kind of focusing on narrative, focusing on, stocks that are going up because of the dominant fundamental factor in the market, which is AI, right? So, um, and the reason why I say that is because I missed this entire move in Iron. And this was a monster, man. Like I was watching this in June and I told myself, oh look, it's forming a cheat, right? And then I watched it break out because so I didn't take it because it gapped and I was telling myself, okay, I'm not gonna chase this gap. But then it turned out to be a monster. And then kind of looking back, you realize, oh, okay, like, AI, data centers was a big thing, and all these crypto miners are kind of transitioning their business into doing this. But then what I did with Iron was I saw it break out. I'm like, okay, I'm gonna wait for the next, proper setup or proper entry, and then I chucked it away into my other watch list, right? And then I just stopped focusing on it and then I just kind of took, other stocks that weren't exactly in theme. And so then, I missed this. I missed BE as well. Went on a monster run. I missed SNDK. Um, so one of the focus this year is to really focus on things that are in theme, that have kind of like a fundamental narrative or backing behind it. Um, and then the other thing that I wanted to focus on is to take more EP plays, right? So MP, for example, was one I missed. Even in the late April, May period when Dave and Cecil went crazy, like these were
Mm.
perfect, right? But I just didn't take EPs enough, right? So the only EPs that I took was in CRNC early in the year, and the other one was Octo, which is now ORBS. These were the two that I took, but then I didn't take them enough, which I felt like kind of looking back, it would have contributed more to my bottom line. So these are two goals that I'm mainly focused on, this year, aside from kind of maintaining that goal of keeping my drawdown small.
Awesome. Yeah. I love that goal of the like understanding the fundamental story and the theme. I think that's huge. And I think not only like to keep yourself in the right names, right, that are working, but I feel like knowing the story really well can help you hold for the big move. You know what I mean? Versus just
Yes.
being in a chart that looks pretty. I think I remember the first time I like first heard about this was when Oliver Kell was like talking about trading Tesla in 2020 and how like a
Oh yeah.
big part he said was because like he knew the story, he knew why I was moving and he believed in it. So like that was able to really help him like stick with it and really hold for the big moves, versus just being in it because it's trending. You know what I mean?
Yes, exactly, exactly. So Ethereum last year was a big one, right? So kind of understanding the narrative behind
Yeah.
that.
Yep.
This was an awesome trade. When was this? Yeah, right here, all the way up. This was an awesome trade, and kind of like understanding the story behind it. Like institutions were adopting, um, you know, crypto, right? In terms of the blockchain technology, into into their business or something like that. And then of course, like technically understanding the positioning, understanding kind of what was in theme at that time. This really helped in terms of contributing to my bottom line. So that was kind of reflecting on 2025, which is why that became a goal in 2026.
This was such a fun trade. Like again, like you said, kind of connecting all the different dots of the story to make one full complete move and capture that. When you're kind of preparing that watch list, I mean, are you like setting alerts like that, or are you just constantly throughout the day scanning through kind of that broader list and looking for what's being close to triggering, then putting it on your screens and observing it throughout the day, or are you like narrowing it down to a select 3 to 4 right away in the morning, or how does that kind of process look like from morning to market open?
Yeah, yeah, that's a good question. So like in the morning, when I wake up, so kind of send my son to school, and then I sit down, to have breakfast at a cafe or at home. And then the first thing I do is I would look at my watch list. So I begin to flip through all these charts, right? So as I'm doing it right now, for example, the first thing that I kind of notice is, okay, um, generally speaking, like a lot of stocks look kind of extended, right? So now, okay, now I'm looking at Voyager. It looks interesting. If it could go sideways a couple more days, maybe there's a setup there. So then what I would do is I'd promote it into my almost ready kind of watch list. And I begin to, so I do this exercise. And then basically what I would do is I'd eventually narrow it down to a focus list, right? So if probably like, 5 to 6 names that I'm focused on long, maybe a couple of names if I see any short setups on the short side. And then I would kind of focus on those when the trading day starts. So for me, it'll be in the evening, and then seeing if they trigger, right? So, oh, the other thing is to kind of also, it goes back to situational awareness, right? So to begin the year, I missed SNDK, I missed all those breakouts just because I was battling a drawdown in December, right? So I was a bit more trigger shy. And then to start the year, I told myself start slow. So I missed 2nd Jan when all the semis and the memory names were breaking out. And then I also missed all the defense names that ripped up straight off the bottom. And so then I tried to get myself positioned. So I was buying on strength. Um, and then buying on strength yielded a very low batting average. So I was kind of looking at my trades for the first week, and the batting average is less than 20%, right? So I'm getting crushed by this market. But then saving grace is because I was battling a drawdown in December, I was sizing down. So those losses were really, really small cuts. And then, taking the weekend, so kind of going back to the weekend, I took the weekend to kind of reassess, right? Like, um, what has been working, and what has clearly been working was buying on weakness. So kind of watching for, say, a market gap down and the stock also gaps into a potential support level, maybe prior structure. So something like a Baidu. So this was a recent one. Um, so kind of Baidu ran, right, towards the end of December. This was awesome because the weekly was perfect, right? It just blasted through this weekly pivot. I didn't get on, but then I was watching it, and then I waited for a pullback, right? So the market was pulling back the day before. Baidu pulled back. It was, pulling back into prior structure. So this was the kind of base breakout level. So you could take it as um, resistance turn support. And then the 10 EMA was catching up too. So you have 2 lines of support, right? And then you buy that pullback on the turn. And so buying pullbacks have been working selectively in strong stocks, right? For the most part of January. So kind of having a couple of names you have unfocused, and then determining your entry tactic before the market session opens. That's kind of how I approach it. So I wouldn't flip through this list, right? This wide list of many stocks to hunt for setups. But I would probably do so, say, an hour or two into the trading day once I've gotten my work done. So say I put on a trade or two, and then I'll begin to look at this list again. And then during the trading day, I begin to recategorize and see what the health of the market is actually like during the trading day. So that's kind of how I approach it. And then so 1 a.m. my time, so I guess it's noontime in the US is when I set my hard stops, and then I go to sleep. So the hard stops act as a guardrail. If something happens, I would be protected. So kind of we were speaking earlier, I was long the SQQQ when the Nasdaq was kind of trading into the 50-day earlier in the session and began to roll over. I went long on that turn, and then I had my hard stop in, and I was glad I did because it reversed all the way and even more, right? So it stopped me out. So um, that's kind of how I approach it in terms of like watch list preparation, execution. Yeah, and then just kind of management after I'm off the desk.
What are some of the things that you traded so far this year? I know it's only been a few weeks, but you mentioned that you had a little bit of trouble in the lower batting average in the first week and a half or so. Have you gotten a little bit more traction over the past few days since? or what are some standout losers or winners?
Oh
I
yeah.
guess.
Oh yeah. So let's start with the loser. And this is a reminder never to trade stocks and stage for downtrends, right? So, Ethereum looked very interesting. And the reason why I was kind of interested in the whole crypto space is because it stopped going down, right?
Mhm.
So, and kind of looking at MSTR as well, like I think it was after November it stopped going down. It began to go sideways. So I was kind of thinking like, what if we turn here? And I guess it's a lesson also in when you look at social media and you watch these interviews. So for example, I think it was Tom Lee said he was super bullish on crypto, and then for me, I had such a great run in Ethereum last year. I thought, okay, like maybe I could catch this turn again, and so I got long ETHU, right here when the year started. So it was a really tight stop. I remember crypto was pulling back, and so Ethereum was pulling back into the 20 EMA, and so I bought that pullback, right? And then I had a great run up till here, but I didn't sell into strength, right? But then kind of thinking about it in the context of this chart is it's trading below the 200-day. If I want to take a long trade here, I have to be more tactical. And by tactical, I mean by tactical, I mean, to really sell into strength aggressively because this is a broken chart.
Mhm.
And so I didn't. And then the day before, because of Trump or whatever, that tariff bomb, it gapped down. And then so I ate this big gap down, round tripped everything. So this one sucked, right? The other thing was kind of trading Reddit. So to start the year, Reddit was very nice because it was kind of forming this low cheat. And then I was able to buy it off of priority highs right here. So to start the year, yeah, Reddit was my first buy. And then I round tripped, right? So this one sucked. And then there were other stocks as well where I tried to buy opening range and then I kept getting stopped out. So, I don't remember exactly which ones
Mhm.
already. But then I kind of shifted my mindset to buying weakness. So Lemonade was one that worked very well, where I was buying this on the 12th of January. I remember the market was pulling back. And if I look back on this day, if we look at the 30-minute chart, yeah, so it kind of pulled back into the 10 and 20 and then began to recover. So I was buying it through there. If we look at the 5-minute, so right here, like it pulled back perfectly, and I
Mhm.
took it on the opening range, stop at the low day. And then because it was such a choppy environment, I was trimming into strength, right? So where was it? Yeah, right here. And then the next day, I was trimming some into strength. So I took a third off, and then eventually it stopped me out break even right here when it wicked me out. Um, so this one kind of worked, but didn't. And then WDC was one that really worked for me. So kind of focusing in theme, right? I bought this right here on a pullback to the 10 and 20 on the 9th. And so STX was doing the same thing on the 9th. So yeah, I was buying this as it reclaimed the 10 and the 20, and I put my stop at the low of the day. And so then this one really worked, and I'm still holding a partial um, right now. So like kind of buying these pullbacks have been working rather than chasing for the breakout,
Mhm.
right? So like for example, if so I did chase this yesterday. I bought it through priority high and then quickly stopped out, right? So um, when I look at the intraday price action, the feedback, my trades, I kind of think about what's working, right? So right now, it seems to me that buying strength is still not working, but buying weakness opportunistically has been the better way to make progress so far.
I agree.
I have a quick question. So,
Yeah.
looking at your trader line interview, it seems that you're an advocate for taking rigorous stats on your trading and all that stuff, win rate, average win, average loss, all that stuff. Um, I've listened to a ton of trader interviews, right? I've studied a lot of traders, and you often see among a lot of the top traders that their math and their stats will show that each year that they have a good year, that say just a handful of trades will make up for 70, 80, 90% of their yearly profits, or not even just a handful of trades, but 1 or 2 months, like two really hot periods of trading where they were able to get progressive exposure, all that. Do you find that's the case with you, where like there's maybe a couple short periods each year where like that make up for most of your percent gains for the year, or maybe even just a few trades that work out really well?
Yes, I would say kind of looking back, definitely a couple of periods contributed to the bulk of my performance.
Gotcha.
So so kind of looking at the return for 2025, I was basically how should I put this? So May, for example, was a big period. So that whole May run was a very good momentum market, and then kind of September was a good period as well for me, in terms of the long side, right? So those two periods kind of made a lot of my returns. And then kind of July and August, the main contributor was mostly Ethereum, right? But
Yep.
then
Yep.
the market environment at the time was spotty. So kind of catching that was a booster. You can call myself lucky or whatever. So you have certain outliers sometimes in some of these months. But then for the most part, I'm actually just treading water. And I'm treading water, especially when I guess the market environment was not really favorable, so the opportunity set was quite thin. And then also I'm not exactly trading well as at that period too. So June wasn't very good for me, just because I missed coin and CRCL. I watched it break out, and then I told myself I won't chase, and it was a ripper. But then generally speaking, June was pretty choppy. I think the big moves were in the precious metal space that month. And then December as well, I didn't control my drawdowns well. Um, and then it's been generally very quiet, or if you weren't participating in the precious metals in December. Um, so yes, to answer your question, there are certain pockets of time in the market where most of my returns are made then, and then the rest of the time has been kind of um treading water, trying to chip up or aim for these like tiny gains which will add up over the course of the month. So that's kind of how I approach it. So kind of, for example, in January this year, I haven't been too aggressive. So I've limited my maximum risk per trade to 0.3% of equity capital. And then I'm kind of taking these partials along the way as the stock moves in my favor, just to build that cushion for the year. Um, and the mindset is to kind of, okay, as long as I don't end the month negative, and better still, if I could manage to get a 6% up month, then I'm on track for triple digits by the end of the year. I'm just like biding my time and trading small until the market environment is telling me, okay, it's time to slam the gas and go for it.
And what are kind of the top like two, three things you look at to know that like, okay, it's time to get aggressive?
Yeah. So first thing, definitely the most high, like the highest EV moments to be long is definitely after a market correction, right? So, um, something like this last year, this was perfect because it skewed the probabilities that we were going to go higher, um, massively, in our favor. And so something like this period was a time to really slam the gas and go long. Whereas, when you've kind of been in trend for a period of time, uh, and then you begin to see like long setups thin out, so you don't see as many of them. And even if you see them, the quality of it is not great, is when it's probably good to kind of pull back your aggression a little. Um, and then just kind of bide your time until, maybe we see the Qs trade down to say the 200-day, right? And then when it, after you've gotten a correction of that magnitude, and price has gotten to a level where it's very interesting, is when you start to do your homework, right? Then for a swing trader, what you want to look at is, okay, so with the index trading at the 200-day, what are some stocks that are technically stronger, right? So kind of going back to the April example, the Qs are trading below all these moving averages. It's super extended to the downside, but then you have something like Palantir double bottoming and still trading above the 200-day. And then so that's one thing, kind of identifying stocks that are technically stronger. And then within that universe, if you're able to identify that, um, like does it belong to some sort of narrative that is innovative, right? So AI has been that dominant narrative, and Palantir kind of fits in that whole thing, right? So when you see stocks like that, and then so once the market follows through, um, you're going to get a big winner. So kind of if you look at all the model charts in how to make money in stocks, the best opportunity, the highest EV opportunities are after a market correction. And so then that will be the time when, you should be aggressive, right? And for the rest of the time, you kind of treading water and taking trades when there's the opportunity there. But then, would I be very, very aggressive? No, probably not.
Awesome response. Yeah, I was interested because I remember like one of the first Christian Kulmagi streams I ever watched was like an old stream from like early 2019, and it was just after like the tariff correction in late 2018. And he
Yeah.
said he like doubled his account in like 4 months off that bottom. And he said that like I remember him saying he said the best time in the markets to make money is right after a big correction. And I think a lot of people like struggled a little bit last year because I mean, that was a really nasty correction, right? That was, I mean, one
Yes.
nastiest correction we've seen since COVID. It was really fast. We saw like one of the most unprecedented, like 3, 4 day moves in the indexes, like in history.
Yeah.
And I think people were kind of traumatized from that, even long traders who weren't even short, or maybe even just sitting in cash and they were a little late to the jump. After that, correction kind of turned back up. What is your mindset throughout all that? Like, is that just experience? Like, were you just excited and just waiting for the moment to pounce, or?
Yeah, I would say I definitely did not have enough experience kind of trading last year's April because I think Braco, you were on this trade too, the TQQQ. I was on this trade as well, and I caught almost the exact bottom. But then I sold it out day two, So um, the kind of looking back now, I think you know, I was in a good emotional state to trade whatever happened after April because I managed to build myself a cushion, right? So taking advantage of the short side, or trading more opportunistically, kind of selling faster and more aggressively into strength to begin the year. I had that cushion going into April to be more comfortable taking a little bit more risk, right? So
Gotcha. Yep.
kind of what I spoke in the Trader Line interview. And this is a great book, by the way. So Trader Vic, Methods of a Wall Street Master. The three underlying principles, right? So you go for preservation of capital first. So make sure you don't lose money. Once you're able to once you're able to do that, you go for that consistent profitability, right? So kind of chugging along, um, you know, building, small wins that will add up over time. And then once you have that cushion, then, you are in a psychological state, and financial state to go for those big returns, right? So
Yep.
that's kind of how I approach it. So kind of going back into April, I guess I was mentally in a good state to take more risk. And then also understanding that after a correction, that's the time you should really go for it. So I only realized that towards the end of April when I was chopping myself up basically for majority of April because I caught the TQQ, made good progress, and then chopped myself all the way back down because for some reason like I was short biased. I don't even know why. So that was the inexperience, but then kind of recognizing that and then flipping on a dime, catching a couple of the leaders off that bottom is what was kind of what worked for me. And then kind of going forward now, like once I understood that is now I just can't wait for a correction. Like I'm excited if the market can just drop, right? And correct.
Yeah.
Because I know like the moment the correction ends, that's the big opportunity. Like that's the time when you could choose not to trade the entire year, right? And then the only time you trade is after a correction. You catch all those leaders, and then you delete your brokerage app, you turn off your screens, and then you come back in a couple of months, and then you realize that you've made your year. So like that's kind of what I'm thinking of right now. So in the meantime, until the correction comes, I'm just treading water and building cushion.
Awesome. I got two questions from the chat here. One of them was, what about the Christian Flanders dinner? What was so impactful in your journey?
Um, it was definitely the part where, so first of all, that guy's baby Jim Ropel, right? Like he's eternally optimistic. So I remember I brought him out to sushi that day, and then the first thing he asked me was, "How do you trade?" And then so I told him, "Okay, Mark Minervini, Christian Kulamagi, big inspirations, Gil Morales." And I was like, oh, "Okay, cool. I trade like Mark Minervini too. Like we had the same kind of trading inspirations." And then after that, he went on and kind of spoke about, um, oh, dude, NVIDIA 2024, that was my biggest trade. I think this is going to be the biggest bull market ever, AI. And then he starts spewing all this AI optimism and comparing it to the dot-com. And so that kind of rubbed off on me a little bit. Like he got me fired up on that dinner. And then we kind of spoke about drawdowns, right? So I was telling him like, oh, okay, I've had a great run to begin the year, but then I'm beginning to draw down and not find too much success. And then so that's when he kind of advised me to first of all do that loss adjustment exercise. So if you look back at your trading results on a month by month, like say for the months that you're down, say 10%, um, adjust that to -5%, right? And then kind of calculate your eventual returns and see where you would actually end up for the end of the year. And then also, so that was one point. And the second point was if you begin to find yourself not gaining any traction, say the last couple of trades were all losers, then begin to cut size, right? So if you're risking 0.5% of your equity capital to trade now, lower it down to say 0.3%. If it doesn't work, and then you cut it in half again, say 0.15%, to the point where you're trading so small that your equity curve volatility contracts, right? So you're creating that,
Mm-hmm.
you're trying to create that higher low and volatility contraction in your equity curve. And then the moment where the market environment feels easier again, your situational awareness tells you that this could be the turning point where we go on a good run. That's when you ramp things back up. So you go back to 0.5% and then you kind of gauge and see whether that's been working. And so that's how you create the higher low in your equity curve. Yeah, so that was the dinner.
Awesome. Another question. Someone asked about the daily market plans you post on Twitter. Can you
Yeah.
go over your process briefly for making these, and does it help you kind of just get an overview of the current market and the environment?
Yeah. So the daily market plan is just a means for me to kind of document my process and my thoughts, right? So the reason, so how this came up was kind of looking at my before and after throughout my journey. So kind of before, I turned the corner and became profitable. I didn't do this, right? So I was just like looking at stocks that seem interesting, and then I was just trading that. So I had no structure, no plan. And then, so this was inspired by Jeff Sun, because back then, I think when he was still competing, he would post these plans as well. And I thought like, hey, this is a very good way to kind of build situational awareness and be accountable to your own process, right? So whatever you write here, make sure you follow it and you don't deviate away from it. Um, so every day, like I would, as part of flipping through those charts that I spoke about, I would also kind of look at the general market, right? And then kind of come up with a couple of liners in terms of commentary on how I thought, the trading day went. And then I like to look cross asset class. So in this market commentary portion, I would talk about, first the index, and then I would talk about the dollar index, and how, precious metals and crypto has moved as well. So from a cross asset standpoint, like it gives me a better overview of what actually happened throughout the trading day. So just for example, like if the Qs are in a strong uptrend, if I see like crypto strong and setting up, that kind of tells me, okay, like maybe we're seeing a little bit of risk on, right? So that's kind of how I think about things. Or for example, if the dollar is kind of shooting higher, right? Then the first thing I think of is, okay, like maybe precious metals would be affected a little bit, right? So those are the things I kind of watch out for. And then aside from the market commentary, I begin to talk about how I've performed for the trading session, right? Where do I think I could have done better? My read on, the market environment and how I should approach it going forward. So these are the things that kind of help me put myself in a proper emotional state to trade the trading session later on. And then of course, like I have these like the dashboard right here. So this kind of gives me a broad overview of what happened during the trading session. So at a very quick glance, I could see, okay, it's been a big red day. In terms of performance the past 5 days, the staples actually kind of led. So that tells me it was risk off 2 trading sessions ago. And then when I look at the thematics, there are a lot of commodity related sectors that have performed very well. So that kind of points to me where the focus should have been, which was commodities. So they have performed much better. I think they've been able to hold their trends and they were much less choppier compared to, say, if you're trying to get positioned into other sectors. So this is something that I try to do every day to just it's an accountability kind of measure for myself, and it keeps me in my game. Is what I would say.
It all kind of contributes to the overall market awareness, and yeah, to make sure that you're, trading in the right areas, you're in tune with your where you're at mentally and everything. Um, this is kind of a straightforward but also loaded question. Why do you think so many traders lose?
Good question. Um, I honestly believe it is a result of behavioral leakage. Like, you know, a lot of my biggest losses and drawdowns came from the emotional instability of being aggravated by the market, right? So kind of over trading when I know that I shouldn't, or kind of doubling my size when I know that I shouldn't. It's those little things that kind of add up, and then it will culminate in a big loss, right, over time. And so then kind of if you could take control of that and maintain discipline, and kind of understanding the big picture, right? So thinking longer term, understanding that it's 1 whole year to kind of generate your return. There's no need to be in a rush, right? So a lot of traders kind of feel like they need to make their returns now, um, and especially when the market environment is not favorable. That's kind of how it leads to a lot of their downfalls. And of course, myself included, I've been through that and understood that I need to be able to keep myself in check. Before I kind of approach the markets, right? So I think it's mostly a function of behavioral leakage. And so then if you could fix that, and then of course, having having worked on the technical aspects of trading too. So having a sound system, trading, as a start, trading one setup only, right? Being an expert in that is what I would, and then combining that with proper emotional discipline is what will turn things around for traders, I believe.
I have another question. I mean, now that you've had, two back-to-back pretty solid years, do you think it's had a big impact on your mindset and your discipline as far as, knowing that your system works as long as you kind of stay patient and, stay systematic about things?
Yes, I think like especially last year, it was a very big confidence booster in a sense that so there were times last year that I struggled as well, right? Like I'm drawing down, nothing seems to work. I feel like the worst trader ever. Like I just can't do anything right. But then kind of leaning back on process and then riding through those lows in trading is what gave me confidence in what I'm doing, like in my process, right? So what I'm doing actually works. Kind of especially with this month as well. To start the year, I felt like the worst trader ever, right? Like, um, I began, like, so December was a drawdown month, and then I tried to get positioned to start January, and nothing worked. And it really sucked for the first week or so, but then kind of sticking to process and adjusting to what the market was giving me, and then kind of clawing my way back from it already gave me that confidence that I could, um, that my system works, right? So, um, and then of course, like, I had two back-to-back good years. Also being very self-aware that last year was probably an anomaly. But of course, as a trader, you want to create as many anomaly years as possible. And you can only do that by continually working on your game and just staying humble, right? Like the markets will humble you when you least expect it. So just remember that. Um, and yeah, just trading what you see in front, like just trade what you see in front of the screens. And being disciplined is actually is how I'm kind of approaching it going forward.
Kind of a similar question, but Bracco, on your review that you recently posted, you talked about having a bulletproof mindset, and I feel like that's going to be continue to be a consistent theme that we discuss on Zoom with the traders in the group of how to kind of maintain that bulletproof mindset. Clement, what do you think allows you to kind of go through the past 2 years, having the performance that you've had, going through just recently December, and then the early part of January, and you just mentioned how, after those 2 years, you're thinking like, oh, what's going on? I can't get into these stocks. I'm not doing too well. And meanwhile, look, like, to me, that's like funny. I'm like, look at this guy. He just put up these two monster years, and he's sitting here, thinking like this at the beginning of the year. And then obviously you snap, into the market, and adjust to be in tune with what's working. What attributes to you having that kind of bulletproof mindset to get back on the horse, knowing that you can execute and knowing what you have to do next?
That's a great question, Pat. I think, like, first of all, kind of thinking back to the dark periods of my trading, right? Like, um, revenge trading, well, revenge shorting Tesla on the way up and hitting that big drawdown. Um, I think back to that moment a lot of times. And so first of all, like, I always tell myself I never ever want to get back there. And then second of all, it's like kind of being grateful that you went through it, and like kind of recovering from that. um it was so bad. Like the mindset was, it was so bad then, so it's not really that bad right now, even though it feels very bad at the current moment, right? So being grateful, and then also kind of looking back, throughout the course of the last two trading years, going through all those highs and lows, and then just kind of tiding through it and realizing that, you have the ability to bounce back, right? So this is just kind of like a small blip in your entire journey, thinking long term, um, knowing that, and then of course, having that Mamba mentality, right? Like I grew up watching Kobe, so I'm a big fan of Kobe. Watching him, kind of bounced back from injuries. I remember he dislocated his thumb or something, and then he just popped it back in, and he went back to play the game. Or he kind of dislocated his shoulder, and then he just shot with his left hand instead of the right hand. Like that kind of mentality, and spirit, I felt like is worth learning from, and it's something that I hope to kind of adopt. Kind of treating yourself like a professional athlete, right? Right, like that's what Christian said. I think is very important.
I mean, it's the same thing though. I mean, with a sub 50% win rate, a sub 40% win rate, even sub 30% at sometimes, it's like the same thing as dislocating your finger and getting up there and shooting a free throw. Loss at loss, and then still coming in and taking that entry signal. Again, granted on smaller size, and implementing all the protective and defensive measures, of course. but it's so true. And kind of going back to, why do traders lose? It's the same thing. Another thing I think is, kind of strategy drift, right? Is like, oh, this hasn't worked for the past four times. Let me completely upend this and try this completely new thing. When in reality, right, it's not every strategy is not going to work all the time. There's going to be periods of failure, I suppose, for every different strategy. Um,
Yeah, 100%. No, that bulletproof mindset thing you brought up. I mean, that was inspired by Christian too, which a lot of my goals were. Um, but I remember I was talking to him in like October last year, and look at this guy who's just put up like 1400% compounded, 2-year returns, and he's talking to me about how he just like hired a mental coach to like work with like every week, like to just
Yes.
get even better. And I'm like, oh my gosh, like this guy's an animal. And I just realized that like, man, like, a lot of people are spending their times, whether it's, working on different indicators or building different scans or, back testing strategies. But, how many people really actually like take the time to like actually master their mindset like any other skill? You know what I mean? I feel like it's a common misconception to think, and that I thought previously, that it's something that just kind of like comes with experience, which in some way it does. But, Christian made me realize that it's something that like you have to actively be working on as well. And that's what's really going to separate like the great traders from like the average traders. You know what I mean?
Exactly. Yeah, I agree.
Where do you want to be in, or where do you want to be, or where do you see yourself in 2 years, 5 years?
So this year I kind of taken up a role in portfolio management. So I'm
Oh,
working
nice.
for a family office right now. So
Congratulations.
the other kind of psychological shift that I'm dealing with right now is size, right? Like kind of I'm still taking 0.3% equity capital per risk, but then because the book is much larger than my own account now, I have to deal with the dollar amount loss,
The
which is
scaling.
magnified by
Yeah.
a few times. Yes. And so that was something I was dealing with, which I felt like, okay, I've kind of adjusted to it right now. Um, but yeah, like in 2 to 5 years, I hope to be able to manage a larger AUM, eventually get to a point where I don't need to worry about money anymore. So that's kind of a big goal for myself and my wife.
Hmm.
Um, because in doing so, then I kind of unlock that time freedom to spend more time involved with my son's growth. So he's 3.5 right now, turning 4 next year. So that's been huge for me. I think the last 2 years have definitely helped in that aspect. So, I mean, you not having to worry about money anymore, but then, thinking it could be better, so
Of course.
um, I haven't reached, what Christian would say escape velocity yet. So that's the goal.
Congratulations. I didn't know that you're doing that with the family office. Congratulations. That's awesome. Um,
Thank you.
Yeah, I saw his account today, and I saw you updated it in your bio with portfolio manager, and I was like, oh, we got to ask him about this.
Yes. It's exciting. It's exciting. I agree to it because I kind of identify with the founder's values.
mhm.
He's someone that prioritized growth over, over anything else. And so kind of identifying with him and him being a trader as well um, was what made me feel like, okay, like this could work out. So I was quite excited with the opportunity. Like it happened to work out late last year. So it's a new journey for me, and we'll see how it turns out.
Wish you all the best.
Awesome. Well, I mean, that's all the questions I got. I think this was awesome. You got anything else?
What do you think about stocks, man? What do you think about the current market? What are you thinking? What are you looking at tomorrow, rest of the week? What's up?
Okay, so um it's tough, man. It's tough. Like I'm not entirely sure where we're gonna go from here. I think it's right now since October we've been in a range, right? So um that being said, there are some stocks that look pretty interesting yesterday. So AMD and Intel was very, very strong.
Yeah.
Um, but for me, there's no setup yet. So these are the stocks I'll be watching. P-Lab was pretty strong, breaking out this flag yesterday. I've also kind of noticed biotechs, not bad. So kind of biotechs ripped off the bottom last year, and then finally kind of put in some sort of consolidation. It is looking a little wide and loose, but then if you look at the weekly chart, it's quite interesting. Let's see, 1, 2, 3, 4, 5, 6 weeks sideways. The 10-week catching up. 40-week, which is the 200-day beginning to slope up. So I'm beginning to wonder if biotechs are gonna participate in this bull market um, with more significance going forward. Um, but yeah, like kind of looking at the memory names as well. So this is the on balance. So MU is kind of extended. SNDK, I think it's, kind of extended. When I look at, the defense names, kind of KTOS, that pullback was nasty. AVAV, this breakdown was nasty. I think it was on some
Nasty.
news. Yeah. When I look at the space names, so Rocket Lab's gapping down a little bit. PL is extended. SATS Echo Star is extended. ASTS pretty nasty wick yesterday as well.
Mm.
So kind of looking at the leading themes, it's things are extended. So I'm kind of wondering, like, are we going to get rotation into the underloved areas of the market? Or um, are we going to get more chop and then eventually break down? Is kind of what I'm thinking. The uranium is very strong. Like I wasn't able to find my way into this. So CCJ, if you look at the uranium ETF, it's going to break out into new highs soon. So this sector to me is kind of in focus. So I do eventually want to find my way in. Um, so yeah, like it feels like a stock picker's market. Like if you're in the right stocks, you do very well. If
Mhm.
you're not in the right stocks, you'd find yourself chopping yourself up. So when I put all this together, it's not a market environment where you want to be very aggressive, right? So you kind of be a bit more patient, wait for the setup to come to you. So if I flip through my breakdown watch list, you see like there are quite a number of stocks that look pretty ugly. Um, so it's not really an all systems go, blast your long um, market yet, right? The Max 7 looks very heavy, so very tentative. The only thing we can do now is to take things day by day and just kind of wait for that big opportunity because it's not here yet. But I feel like we'll get a resolution quite soon. That's my sense.
Yeah, I think so too. I got a lot of things that are either fairly extended or kind of in between us there where I'm not quite sure if that's where the money's going to get rocking to next or if they're just going to be kind of lagging and in range and just chop around. Again, kind of just waiting for the market to kind of give those answers. I got knocked out of a few things today. I was in Fly, Irene or Iron,
Yeah.
and got knocked out of this today. Might find my way back into these. Probably didn't honestly have to sell these. There were just some big moves. They broke below the levels where I had my stop, so I sold them. Like it's as simple as that. I do wish I would have bought
Yeah.
back in towards the lows, but you know,
That's
I don't know.
trading, man. That's
I
trading,
know.
Pat.
I know.
Yeah. I think generally if we like just follow the principles of kind of chipping up and building progress throughout the year, as much as we want to kind of hold our winners for as long as possible, I think that's the goal as well, right? Like if it's not kind of technically doing anything wrong, you want to try and hold on to it. But then when you're in the moment and the market is just so volatile, it does become difficult, right? So it's a balance.
Yeah. One day at a time.
One day at a time.
All right, man. Well, good luck for the rest of the year. I hope to continue a relationship and talking, about the market, rather than just this one interview. I think there's a lot of things that we can all learn from you, throughout the year. So I look forward to A, chatting again and B, continuing talking about the market together. Okay.
Yeah, sure. Thank you, Pat. Thank you, Braco.
Of course, anytime. Please, I'd love to have you on again in a couple months or sometime in the middle of the year for a little update. That'd be great.
Yeah, yeah, for sure, for sure. And good luck to the both of you, and hope 2026 will be smooth sailing.
We'll
We'll
see about
see.
that. All right. Have a good one, Clement.